The No Money But Dreams podcast is for those millennial dreamers
who try to be in the top 1%.
It doesn't matter what we've achieved.
We wake up every morning with the mindset that we're still broke,
We welcome you on our journey in search of that home run.
which can change everything.
Everything?
Everything.
Welcome to another episode of the No Money But Dreams podcast. Today with my co-host, Mr. Tarik. How are you doing today? In a beautiful, beautiful summer in Dubai. Today, what we want to be talking about is kind of what are the do's and don'ts of financial advice that we've received over our humble 36 and 37 years on this planet. So I think a lot of people struggle with the right way to look at how to invest money, the right way of how to build their financial capabilities and wealth. And obviously, I think it's not as complicated and as complex as everybody makes it out to be. But starting off from your side, what is the best financial advice that you have ever gotten?
Someone told me once, if you want to become filthy rich, do it slow.
Mm-hmm.
And that's very contrary to current get rich quick overnight success that everyone on Instagram and on other platforms is pushing. That stuck with me, and I'm sure that I've heard many other ways to create wealth or how to do it as well. For me, growing up, I was taught to work hard, right?
Mm-hmm.
But there was no ideas passed down on what to do aside from buying real estate.
Yeah.
Right? And our generation, especially post-COVID, the world looks very different.
Mm-hmm.
A lot of people are interested in investing their own money, but they don't necessarily have the education or the knowledge on how to do it, right? And there's many different ways that you can create wealth. I know one of my friends, he's investing in art, right?
Mm-hmm.
And I have no idea, but he has made a lot of money in buying art pieces.
Yeah.
Right? There's other people that invest into crypto, others go into ETFs. There's many different ways, right? You need to find out what interests you and what do you want to do.
Mm-hmm.
Because the blueprint that has worked for other generations may not work for you because it's too difficult to get a down payment for a house, or, could be your circumstances are unique and you need to find out what can work for you. And for that, you need to invest time to understand how can I get started and how can I start building wealth?
I think just circling back to your point about like alternative investments such as the art, is you go on TikTok or you go on Instagram today and you'll have like a 16-year-old kid that says like investor. Like at our age, at 16 years old, you weren't thinking about investing, you weren't exposed. And they're not necessarily looking at stocks or opening a CFD account or opening any kind of account like that because they're not 18 yet. But in their head, they're looking at how can I flip a sneaker? How can I get $500 from my mom, go and buy the sneaker which is in high demand over here, and then sell it to somebody at school? So I think as you get older, obviously you have access to financial markets, but there is this massive shift away from property. Similar to me, my parents invested in property. That was the only place that you could park your money, either opening a business or investing in property. But when you look at it, one of the best returns was actually to just invest in the S&P 500.
It wasn't the only way. That was the way that your parents chose.
What, as far as property?
Yeah.
No, it's the only way that I was taught.
Yes.
You know what I mean? It wasn't the only option.
Yeah.
But same as you, property has always been this asset class which everybody says is a safe haven. It's the easiest thing you can do. But as inflation and property prices have gone up by I don't even know what, if you were to annualize it, getting that first down payment is virtually impossible. So obviously people are looking at different ways. And if you're not educated and you only think that property is an asset class to invest in, then you kind of block yourself off from everything else out there.
Yeah, the other thing that you realize over time is that people only really think about their finances in a number of very small lifetime events. When you get married, when you have kids, when you want to buy a house, all those trigger points, you stop and think, oh, what am I supposed to do now, right? But then you go through your 20s and part of your 30s, and you're sitting on the sidelines and not necessarily doing anything. And I think, in the UK, where I started my work journey, it's very easy to start investing into your pension, and you get some tax deductions and stuff, right? But us here in the Middle East, I mean, you get a end of service gratuity, right? Which then you use to go on holiday or do something else with it, right?
Or buy a car.
Yeah, or buy a car. But you don't really think about long term and what am I going to do in the future, right? Some people buy a property back home, but a lot of people stay uninvested for long periods of times, right?
Which is a huge mistake.
Yeah, exactly. I mean, S&P 500 or any of the lower risk kind of investments, they could be netting you 7-8% a year, right? And if you don't do this, then you over your lifetime you lose out on a lot of wealth, right?
I think is there a common misconception that saving money is a form of investment? I feel like some people think that holding money in the bank, yes, you can return a yield here, 5.5% with some of the banks, but that isn't actually going to grow particularly. It's going to meet inflation, but you're not going to actually, it's not really an investment. How would you explain that to people, or what are your thoughts regarding holding money in the bank versus actually deploying the cash to try and get some sort of yield on it?
Yeah, I mean, 5.5% at the moment is amazing, but if you look at the bull run that we have gone through after the financial crisis, there was no interest rates, right?
Yeah.
It was zero interest rate environment. So at the moment, that is a good kind of way to try and keep up with inflation. But if you look at the figures and see that since 2020, the US dollar, which is one of the most, the best currencies in the world, has lost 25% in value.
From
right?
when was that?
From 2020, from COVID.
25%? Really?
Yes.
Oh, wow.
Yes. So you look at that, and your 5% in the bank, they don't even make any difference. Like it's just below, right? So yeah, you need to spend time figuring out where can I put my money and what can I invest in, and that knowledge you need to accumulate. And how you get that is up to you. But you saying, "Oh no, this is too complicated for me. I'm not going to get involved." You only shoot yourself in the foot.
Okay, fireside question. Best financial advice: invest in assets, not liabilities.
Yes.
Okay, give me an example of an asset and a liability.
Well, expensive cars.
Is an asset?
No.
Unless it's a GT3.
Yes.
Then it's an asset.
There are a few that hold their value, but as you know, there's quite a few that don't hold their value and they are liability. And an asset is anything that generates income, whether it's real estate or dividends in a business or any of that kind of ownership, right? And that I read this book in my early 20s, Rich Dad Poor Dad. It's a Bible. Like, you have to read this. If you don't understand those concepts, then you're doomed to fail.
What's the worst financial advice you ever got?
I mean, all these get-rich-quick schemes, to me, is the worst thing that you can do. Because even if it works out, and you invested into some kind of shitcoin or meme stock and it went through the roof, if you don't have the knowledge to understand what to do in these circumstances, you will get so greedy and you will lose this on the next investment.
Yeah.
Right? So you are going to fail one way or another.
Basically, the only way the get-rich schemes, the only way they're getting rich is by getting rich off you. And I think a lot of people fall into that trap, especially as we're polarized on social media, to be showing people who are successful and wealthy, private jets, fast cars and things like that. But at the end of the day, how they're making that money is actually selling a course, most of them.
Yep.
I mean, that's been the past kind of like year or 2 years, that's been something that's really hot. But now down the line, like if you try and emulate that, you're probably late. So I think that a lot of people need to realize that, firstly, the stock market, or not that we're only talking about the stock market, but it's forward-looking. Like, the stock market is indicating what people think is going to happen in the future. It's not necessarily what's happening now. And when you're looking for opportunities, I think you need to see things that others don't see if you want to get a good deal or you want to get a bargain. Because when everybody notices, then you're kind of too late to the party. Would you agree?
Yeah.
And how, in your opinion, do you think you can kind of be ahead of the curve or or is it a matter of research? Is it a matter of
Well, you need to develop an interest in something, and then you need to go deep into it, and you need to spend hours and hours and hours researching and speaking to people and banging your head against the wall until you find something that actually works, right? And a lot of the good investment opportunities actually have barriers to entry. You know, it's not that easy to get to 20% a year, right? It's very complicated.
Yeah.
But just keeping money in the bank and not investing it, you're robbing yourself. I mean, inflation and interest rates will go back down, and what are you going to do then?
Yeah, I think the worst financial advice I ever heard is that building wealth is just saving money in the bank. Like, that's the complete opposite of it.
Yeah.
A lot of people have trouble, especially in the UAE, living below their means. How important is that in building wealth, in your opinion? I mean, you write about it on LinkedIn. You've talked about it multiple times.
Yeah. Yeah, in my opinion, is you know, Dubai is very good at giving you an opportunity to earn more than you have in whatever country you came from. But it is even better at giving you opportunities to spend the money as well.
That's
right?
the caveat.
Exactly. So that has something to do with growing up and understanding what is important for you. Some people, they just want to have a good time and they don't think about the future. And then when you look at COVID, over 1 million people left, and a lot of them left without any savings, and they had been here 10, 15 years.
Yeah.
Right? And they would say, yeah, we had a good time, but it really hurt them when they had to go back and move in with their parents and that kind of stuff. So, yeah, I think, you know, everyone to their own, but in my opinion, you need to separate yourself from all the luxuries that life has to offer, and it's, you know, in other parts of the world it's the same offer, right? But here, credit becomes very easy, and a lot of people use that to live above their means, so that, you know, keeping up with the Joneses is the appearances are very important. What do you think?
What I think completely.
You have lived here all your life. I mean, you've been surrounded by this for a long time. I mean, in Abu Dhabi, it's slightly different than Dubai, but still, there's a huge amount of wealth.
Yeah, there's huge opulence. There's a huge amount of wealth, and it's easy to get caught up in that lifestyle of wanting to acquire more material things to essentially signal to others that you've made it. But it's a huge mistake, and I think that had I known that earlier in my 20s or appreciated it, then I would be in a far better position wealth-wise or financially wise than I was. Thankfully, my parents, as we said, were always quite big on property. So I have acquired properties in the UK, and I did distribute money there to have some sort of way to make sure that I'm building wealth over time. And then obviously on the other side, investing in my own business. It's difficult to say that investing in your business and helping it grow was a bad investment. That being said, I did get caught out in COVID. So when COVID started, as you know, obviously things were shut down, things were closed. But then coming out of COVID, when the restrictions were released, there was this huge demand for people to go out and experience and stop eating home-cooked food, etc. And there was a period of supernormal profits, very strong. And instead of diversifying... and
I miss those.
Yeah, me too. Instead of diversifying and going into another sector, which could maybe hedge my F&B play, I didn't. I doubled down, which is sort of counterintuitive because a lot of people say, no, you need to focus and double down only on what you're doing. But I didn't foresee how drastically consumer behavior would change.
Yeah, but hindsight is beautiful.
Hindsight is 20/20, and so is hindsight in investing.
Yes.
It's always easy to look back and be like, I should have put $1 million in Nvidia at $100, right? And then it just becomes a matter of trying to be objective and looking at what assets you have and where you're investing your money and try and be in some sort of balanced way.
What's important also is that you understand the stage in your life that you're in and how much money you actually can put on the side to invest, right? It depends. Like, do you have 1,000 dirhams, $1,000, 10,000, you know? But you need to understand, okay, at my stage, I can be doing this, this, and this. I can't buy a property yet, but I can work towards getting a down payment, or, you know, I can do some in crypto, I can do some in the ETFs, I can do some long-term stuff, but just not participating.
That's the biggest mistake.
Really hurts you. And the other thing that really hurts people is trying to make ad hoc decisions, right? So if you have to make a decision every time you have to take an investment, you're likely to say, no, I'm going to do it later, and the years pass on and you don't actually do anything, right? The great thing is if you just automate your investment and say, every month I'm going to put $500, $700, $1,000 away and invest in this. And over time it grows. Like, this is something that humans just don't understand, compounding effect of time, right? And it's very difficult. Like, I've been working in finance for 12 years, and even I struggle with this.
Yeah.
And I struggle to do this in my own kind of investment, because we all think about the sky and not about the future and the time that can really help us in our investing. Like, I can tell you, I started with my pension in 2012, and until now it's been 14 years, right?
Wow.
So the money has doubled, and I haven't really done anything.
Yeah.
Right?
You're just making money with money.
Yes. And small contributions, I've forgotten about them, but I should have done a lot more. And I could have.
It, yeah.
I could have, right? And
but
now,
hindsight is 2020.
Exactly.
I
I also think that you have to make these mistakes. You have to learn. And otherwise, they can be listening. Anyone is listening now, they will be saying, yes, what they're saying is correct. But
it's action.
I still won't move.
Yeah.
I'm still gonna be in my inertia and not really do anything.
The key is discipline and action. I mean, it comes back to wanting to achieve anything. You got to put a plan in place, and then you got to be disciplined. Like, this is the first time for 1 year. I think it's 1 year and 2 months. At the end of every month, I've put money in VOO, QQQ, and a bit of crypto, regardless of the price, regardless of anything. It just debits my account. I put it in. And it's grown, of course. It's grown at around 25, 30%, not the crypto. The crypto is a bit higher. But it's unbelievable. And the amount of effort, literally, it's an hour. I got to make the transfer into IBKR or into BitOasis or whatever, and then just sit there for 30 minutes, choose what I'm going to buy, and then just leave it, And a lot of people can't do that simple step. It's like a mental block. And if you don't realize to do that, then time will just pass, and you've missed out on,
but
on
even
the whole
that
opportunity.
is too much friction, right?
It is a lot of friction.
Should be automated.
Sure, it could be automated, but I don't know if I can automate it into IBKR from my bank account. With the bank's apps and stuff like that, you can. Do you believe that the only way to build wealth is to kind of cut back on your spending? Like, how important is the cost of your living versus your income and all of those factors working together, especially as your income is growing?
Yeah, I mean, your expenses will grow with your income. It's an illusion to think that, I'm gonna become a director or a manager or something, and I'm gonna make a lot more than you're currently making, and then all of a sudden, then I can start saving. Life doesn't work like this. You want a bigger car, you want a house, you're gonna get a family, you're gonna have school fees, all that kind of stuff. It just almost goes in tandem with making more money. So either you're gonna start getting disciplined now and putting money aside, or it's never gonna happen.
Yeah, it's a habit which just has to be there. And what do you suggest is the perfect percentage that you should save from your income?
As much as possible.
30, 40, if you could put in, yes, as much as possible, but then as much as possible leaves that room to be like, okay, I can have a car loan for an extra 5K, 6K, and it's still as much as I'm capable of doing, but I also have a BMW or Mercedes, which depreciates by 75% after 5 years.
You sound like you talk from experience.
No.
So, yeah, I mean, making sacrifice now and not going on 15 holidays a year and doing all that kind of stuff. You have to decide what's important for you. How much do you want to enjoy now versus how much do you want to enjoy in the future? And I think, you should at least try and get to 25%. Saving.
And would you keep 5% in cash there or no cash?
Yeah, so until the beginning of this year, I never kept any cash. I try and invest everything, right? And I've lost a lot of money this way. I've made a lot of money in this way. But for the first time, I have like a rainy day fund. Also, this coincides with being able to get 5% from the bank in interest, right? But I'm not. 5% sounds about right.
I think the key here is to not have too much cash, but you need to have the money for when it's time to buy the assets.
Yes.
Right? When the market dips and everybody's running away, you actually have cash. Because if everything is invested, presumably the assets you've invested in will also dip in price. So if your income or you lose your job or anything like that, it gives you the ability to not be able to buy at a bargain.
Yeah.
So I think it's very important. And there's some sort of, at least for an entrepreneur where you're not actually getting paid like a monthly salary, there's something very like free or gives you the opportunity to think when you know that you have like 1 year of whatever your life costs in the bank.
Yeah.
In case anything were to take place.
So that I only started appreciating more recently, the freedom.
Yeah.
You know, because freedom, when you look at my expenses, you know, with 2 kids living in Dubai, it's a lot of money, right? And I need to have a lot of money in the bank to get that freedom. And a lot of people will never be able to, or are struggling to get to that point where you can say, yeah, I've got a year or 2 years worth of my expenses in the bank. Because no one wants to cut back on their living expenses.
No.
Right? I mean, I could move back home and cut my expenses by a lot, but you know, the family wouldn't be very happy. Right?
Family's not going to be happy. Your propensity to earn, like at the end of the day,
Yes.
if you were to lose your job, you want to be able to look for the next right job.
I mean, losing a job is one way of looking at it, but the other way of looking at it is, you know, do I actually want the job? Do I want a job? Or do I want to do my own thing, right? And you can't really do that unless financially you're free and you can say, yes, I'm going to take a 2-year break, I'm going to give this my all.
Yeah.
And, you know, everyone knows that I'm a little closet entrepreneur. And at some point, I want to be in a position where I can say, yep, I'm going to do something,
Yeah.
you know. And
Again,
yeah,
the freedom.
for that, you need money in the bank.
100%.
Yeah.
I think that kind of wraps up this whole talk. I hope you guys gain some sort of value from it. And it's always a pleasure to really sit and discuss how to build wealth. Everybody's looking at how to become wealthy. Everybody wants it, and a lot of people don't achieve it. And it can just be a matter of some simple habits and ways of thinking and making sacrifices, but they're not even that huge sacrifices in the long scheme of things. Thank you very much, guys, and catch you next time.